Welcome to the program. Today we're going to talk about what's happening on global markets. We'll discuss a company that seems to be on the up. We'll talk about what's going on with the budget and the prospects of an early election. And we'll talk about whether or not you should be hedging your Aussie dollars. I'm Marty Switzer.
I'm Paul Ricard.
And we're mad about money. We've only got 2 minutes and we're going to cover each topic in no more than 2 minutes. Paul, first question. Global markets have had a very good run over the last month. The US was down last night after a 7-day winning streak. Your thoughts on what's happening at the moment?
Yeah, good 7-day winning streak. I suppose we should also...
We like 7-day winning streaks.
We do like 7-day winning streaks. Should just throw an apology for Peter. I believe he's had a plumbing accident.
Yeah, problem with his shower, I believe.
But anyhow, look, I think when we get extreme periods of volatility, we often get into these periods where nothing happens. I think we're now into that sort of period, both here and offshore, where people are tired of volatility, so we don't know what to do. The US market obviously has bounced back, but people don't know whether it really needs to push higher. The Australian market's got up to 5,200, probably needs to do some work around here.
Sort of finds it hard to break through that 5,200 level, doesn't it?
Yeah, and I think the US is finding the same thing. It's not in bear territory, but it's sort of, people are sort of sidelined. I think the US trading volumes are the lowest they've been this week this year. So it just tells you people are on the sidelines. I guess we're staying on the sidelines for a while as we work out what takes us
So
next.
what do you think are the catalysts that can actually take us off the sidelines and take that market higher and get us up to maybe that 5,500 level?
Well,
what do we need to happen?
I think for us, we've got to follow two things: a US lead or much firmer commodity prices. So the US lead possibly could come when they kick off their company earnings, not too far away for their next round of company earnings. So they're looking ahead to that in late April. Look, we could get an input from that, but I think for us it's still oil and commodity prices, because without those two leads we're going to struggle.
And if they go up, then I guess one of the other challenges that the market will have to deal with is the fact that the currency will probably go up on the back of that as well, which will hurt some of the big players on our bourse and could continue to hold us back. It feels like the issue that we were facing only a couple of years ago with that high currency.
Yeah, and that's been one of the themes of our market over the last couple of weeks. The US dollar stocks, the CSLs, the ResMeds, the Cochlears, the Amcors, the Brambles, ad infinitum, they've all been doing it a little bit tougher as people have been seeing the currency go up and sort of moving out of some of them, taking a few profits in those stocks and moving back. But so we're sort of getting into that sort of, well, if the Aussie dollar is going to firm, US dollar is sort of topping out a little bit, well, maybe it's time to lighten the load there. So I think that will bring us to our later topic, Marty, about hedging.
Moving on, next topic. A company that has had was a bit of a market darling. It's then had a tough trot. It got a new CEO, which caused some controversy about whether or not she would be up for the role.
Yep.
We're talking about Ardent Leisure. Had a very good day yesterday, up about 12%. Talk us what happened there.
Yeah,
Paul.
look, it decided to get rid of its marinas division, or Dalbarina Marinas, which is largely in Sydney and a couple of really scenic places in Sydney.
Rushcutters Bay, I think.
And also out at Coona Bay, I think, is the other place where they are. But look, it's going to offload it. It's one of these companies which is, having been a shareholder since it started back in 1997 as a Leisureworld, I think it was called originally.
Dreamworld.
Yeah, it's got all these disparate parts. Dreamworld obviously is one of its core original assets, as was Dalbarina Marinas, which was another part of it, the way it was set up. The 10-pin bowling through the AMF bowling chain. Now its biggest earner is, some health fitness clubs in WA. Its biggest earner is the main event business in the US. So it's really changed. And the question is, how do all these different things fit together? Now, what are the skills in running a marina got to do with running, a theme park in the Gold Coast, right? Question mark about that. Maybe management is in the hospitality business, entertainment business. So look, it's changing its style a little bit. This new CEO, she's putting her footprint.
Deborah Thomas, I believe, is ex-CEO of Women's
Yeah, look,
Weekly.
caused some shock. Well, then on the market sort of said, what does she know about this sort of business, where she's never been a CEO before in terms of running a mainstream business? I think the jury's still out, because you've got to remember, this company, this share price got to about $3.20 about 2 years ago, when the whole market loved it. It's plummeted back to about $1.80. It's now sort of sitting in the $2 park. I think the market's still out a little bit, but up about 10% yesterday.
Okay. Moving on, next topic. It's hard to miss what's happening in politics at the moment. Talk of an early election, a double dissolution, a budget that we know now is on May 3, something that Scott Morrison didn't know was actually happening now. Paul, your thoughts? Let's deal with it one by one. Let's talk about the early budget. What's that all about? Why are they doing it? And what do we need to know?
Well, I think the main thing about the early budget is there'll be a couple of changes to super. I think that's the biggest impact for most personal investors. Probably won't be a lot else. Obviously, they need to get supply through before they go for the double dissolution. So let's go through what I think are the two or three likely super changes and the actions you could take. The most important one is probably around the transition to retirement pension. This may get canned. I think it won't be retrospective, but only prospective.
So that's when you're 55 years of age, you could actually start to access your super and pay less tax.
Yeah, now mainly done as a tax arbitrage. So I think it's actually, the age is now 56 to start, but if you're between 56 and 65 and you haven't got a transitional retirement pension, I reckon you've got about 5 weeks to go and talk to your accountant and financial planner and sort one out.
Yeah, and for most people,
look,
it makes complete sense.
Pretty well over 60, it works for everyone over 60. Between 56 and 60, there's about 10% of people it won't work for. It's just to do with sort of the components of your super. But talk to your accountant or financial planner and really think hard about whether you should take one out before 7:30 p.m. on the 2nd of May, I think it is.
Yep.
I'm very unlikely to be anything retrospective there. So that's number one. Number two is, look, we may see a change in the super caps down from 30,000 to 20,000. The important part...
It's not uncommon for them to move the caps.
Yeah,
that's happened a lot over the years.
The important part there is really whether the non-concessional cap follows. So typically that's been set at 6 times the concessional cap. So currently that's $180,000. That's for your own after-tax money, putting into super. So the question mark there is, if you do need to make a big contribution to super, you might be, have assets outside super, you might be looking to access the bring forward rule under 65.
It's 3 times 180.
Yeah, whether you should do, if that was to change from 180 to 120, whether you should do that before budget night, big question mark. Then the final change is around the taxation of super. I think the biggest probably change there could be around the Division 293 tax, which is actually just to bring the higher tax rate for where the 30% tax rate charge currently applies from 300,000, possibly down to as low as 180,000. Look, again, not much you can do about that one, but you can certainly take some action about the first two.
Negative. We'll stay on the election. Double dissolution. Malcolm Turnbull, calling an early election, Paul. How likely do you think this is?
Look, I think the odds are still favour that. I mean, let's just talk also, what does it mean for markets? I mean, typically elections are not good for markets, right? Because it's uncertainty. And we asked before, what could give our catalyst to the market? I don't think the next couple of months is going to be particularly helpful for the market. Whether post-July, we have a double dissolution, clear out all those rat bags in the Senate. Maybe we get some new rat bags,
Couldn't be any worse than what we got right now.
Couldn't be any worse than what we've got now. Look, that's possibly a positive, and that also matches with the data, that tends to show that the market goes a bit quiet, actually loses ground ahead of election, bounces back after the election. That's also what the historical data shows. So that could be a bit of a positive. Look, I don't think we're going to see too much else in the budget because they haven't done enough
Negative
work.
gearing off the table?
I think negative gearing's off the table.
From the way the Prime Minister was speaking to Lee Sales the other night, it sounds like they're not going to go anywhere near it.
Yeah, I mean, I think might be a few changes around education, a few little changes around super we've talked about, which won't impact that many people.
Cigarettes?
Yes, cigarette and a cigarette tax. Maybe we'll get a new alcohol tax, who knows what. Probably not much by the way of personal tax cuts. We'll see. Maybe they'll try to do something just to make it give them a little bit of a fillip. I just hope the Liberal Party can get their act together and
keep Tony under control.
Keep Tony under control. I mean, why the hell does he need to go and Paul Murray the other night? I mean, these guys are they're no different to Kevin Rudd and Julia Gillard, right? They are as bad as each other.
Yeah, well, I think he thinks he can come back.
He does think he can come back. Johnny Howard out there, if you're listening to Mad About Money, have a good word to Tony. Give him a deep, I don't know what do you do? Comatose the guy. Just tell him to get away.
I think they call it a tap on the shoulder.
A tap on the shoulder. Someone needs to tell him to get out or at least keep quiet. I mean, I think he can cause so much damage and it wasn't helpful. I mean, who cares whether it's a Howard government, they were Abbott's initiatives or Turnbull's initiatives. It's a coalition government. It's a question of Labor versus Liberal. Look, they're just the leader, and these guys have got to get over it.
There's no high-end team.
There's no high-end team.
But there is a me. Moving on, next topic, final topic for the day, the finance tip. Paul, we had International Investor Strategy Day, the Switzer Strategy Day last week. There was a big theme of international investing. In light of where the currency is going at the moment, sort of upwards of 76 cents, really linked to what's happening with commodity prices and the Fed, I guess that will determine, where someone sees the currency going. What are your thoughts on actually hedging? And firstly, what is hedging?
Yeah, I think there were two takes that came out of that day. One is most of our experts agreed the big movement in the Aussie dollar is over. Yeah, that doesn't mean it won't go below 70 cents.
We did come down from 110.
But we came down from 110 and we touched 70 cents, and we did a lot of work around 70 cents and couldn't crack it. I think that's the big theme. And secondly, you know, the other thing, of course, there's always two parts to a currency pair. What's going on with the US dollar? Look, it hasn't topped, but it's looking like it's forming a real base. Oh, sorry, around it's getting towards the top. There's doing a lot of work up here and not making a lot more progress. So if the US dollar turns around, you know, we've seen the big movement in the US dollar, then the Aussie dollar by definition will probably go up. Commodity prices will be higher, and so that's really got to think about if you're investing offshore. You know, you might have seen the best of the fall in the Aussie dollar. Is it time to hedge, or at least go to a 50-50 type situation, which is what our experts were recommending? Look, hedging is really hard for.
Basically, that means you'll be locking the currency in at today's rate.
Yeah, and so effectively, all you're taking is the equity exposure risk. You're not taking the currency risk now. Hedging is actually very difficult for a small investor. You can do things like FX options, you can look at FX forwards, but you know, you really, unless you've got a lot of dough.
Expensive?
Look, if you've got enough dough, if you're talking, you know, hundreds of thousands or millions of dollars, you can get a good price out of your bank. Now, all the banks offer markets in forwards and options. You know, you can go to people like Saxo Bank, but if you're only talking $25,000, $50,000, it's going to pay a pretty big spread.
Yeah.
So look, and it's hard to do. So look, but talk to your bank about that. The other option is, of course, most fund managers run hedge versions, or at least in many cases take the currency risk. So if you're using a fund manager, in many cases they'll manage it.
Different options.
And you might decide to go to a manager.
Like IVV, for example, you mentioned before, has a hedge version.
And then, of course, even if you're on the ETFs, you know, we always talk about IVV, which is the
S&P 500.
iShares S&P 500. There's also one from Street Tracks.
Yeah.
But there's also a hedge version, IHVV.
Yeah. And that can often cost a bit more as well because of the options.
So it's actually the same cost. It's only 13 basis points. Okay. So one thing you could do is, if you're currently in IVV, you could sell some IVV and buy IHVV, or you could split it between the two. So you can get hedge protection out there through some of the ETFs, but certainly most of the fund managers will manage that for you. I don't think there's a lot of downside in the currency. I think we've seen it. It's my own view. I've been saying that if you're reading Switzer's Weekend, week after week, the currency doesn't seem to want to crack 70 cents. We might have another test of it, but I'm with the fund managers, the experts at our program. I think the big move's behind us.
That's all we've got time for. I'm Marty Switzer.
I'm Paul Ricard.
And we're mad about money.